Yeah, everybody, welcome again to another edition of the Multifamily Formula Live. It's uh, it's obviously a great place for us to connect and get together, talk multifamily. And the format of this is typically just we're going to have a nice conversation. If you have any questions, drop it in the chat and use again the chat to let us know where you're from and what we'd like to connect. After about 45 minutes or so, we'll do some Q&A, and then we'll head into breakout rooms and do some networking and wrap it up all around 9 o'clock.
Awesome. With that, I'll take the opportunity to introduce Mike Morawski, who's here. He's going to be our guest speaker. He's graciously volunteered his time. And Mike's story is one that stuck out to me. Super inspiring guy. He's a 30-year plus real estate investment veteran who has controlled over $285 million in real estate transactions. He is part entrepreneur, part author, part real estate trainer, public speaker, and personal coach. Wow. With strong personal resilience and a deep desire to help others live an extraordinary life. He's coached hundreds of real estate investors to fulfill their dreams. And I'm positive that we're all going to have a ton to take away from tonight's discussion with Mike. So Mike, with that, the floor is yours.
Thanks, Mark. Thanks, Jerry. Appreciate you guys asking me on. And I always love to, give something back a little bit. Whenever somebody reads that bio, I always wonder what my identity really is, You kind of get lost in the shuffle. Anyhow, like you said, Mark, I've been in real estate for about 30 years. I started out as a residential sales agent, and I was actually in the construction business prior to that. And being in the construction business, I had built this entity that was really successful. I had a bunch of guys working for me and number of pieces of equipment, and I was burnt out. I woke up one morning, I looked at my wife at the time, and I said, I can't do this anymore. I'm done. And sold the company. Didn't take me long to sell the company. I actually had somebody knocking on my door who was looking to buy it. And they took all my equipment, and about 6 months I was out, and I decided to take a year off. And during that year, I house hacked a couple of two flats. And now this is long before house hacking was sexy, right? Now it's the thing, everybody does it. You live in the place, you remodel it, you move to the other unit. And so I house hacked a couple of two flats, and I can remember my wife at the time just screaming about the nails on the floor. And, now it's everybody does it. So, but I always, I listened, I heard Jim Rohn years ago, Jim Rohn, famous motivational speaker years ago, say success leaves clues. And if you do things other successful people have done and you followed them, chances of you being successful are pretty good. And whether that success is good or bad, you can learn a lot from it. So during that year off, when I was house hacking, I met a real estate agent who got those two places sold for me, who was really good at what he did. And I thought, maybe I should go into real estate. And I went and talked with him, and he just encouraged me. He said, I think you'd really be good at it. You've got, people skills and the tenacity. And I think that you just hone some sales skills and you'll do well. So I went into the real estate business, and during that time, I asked him if I could shadow him. Success leaves clues, right? So I wanted to follow him around and see what I could figure out. And he said no, that he would do me one better. He made me a cassette tape to listen to. Now I'm really dating myself, because I don't think you could find something today to make a cassette on, much less listen to it. And so I listened to that cassette tape over and over again. And what I realized was that there were some simple, basic fundamentals that if I followed them every day and did the same thing over every day, and mastered the repetitious boredom, that I would do well. And my first 9 months in the business, I sold 78 houses. I was RE/MAX Rookie of the Year that year. I went on to build a team selling 125 homes a year, and did that consecutively for about 9 years. In 2005, I saw the market starting to shift. And I knew that I wasn't really sure what was going to happen or what was going to transpire in the markets, but I knew something was going to change. And so I had always wanted to go in the apartment business. So I thought, hey, maybe this is a good time to try something different. I had about 7 people working for me and knew that I didn't want to have to fire anybody or lay anybody off. I wanted them to be able to, continue to work. So I said, well, I'm going to go in the apartment business. So I syndicated my first apartment deal. And now this is really crazy, right? So I go out, I find this 11 unit apartment building I'm going to buy. And I don't know anything about multifamily, nothing. I've been in the residential business. I've done a couple of 2 flats, 4 flats. I think I even did a couple 6 flats at the time, but nothing really about anything bigger than that. And so I find this multifamily building, and I think, why would the seller lie to me, or why would the broker lie to me about anything, right? So I take all their word. I do no due diligence. I do no underwriting. I have no tools, no skills, and I buy a bag of bricks. But what was funny was I was able to raise the money to do it. So I put an ad in the newspaper, spent $45 to put this little classified ad in the paper, and all it said was real estate investors wanted, and I wound up raising about $500,000 from that one little ad. So I bought that building. We took one of those investors, bought that 11 unit building, and I realized really quickly that I didn't have a plan and that I needed a plan. So I went to my broker, and we developed a buying strategy, a system and process for what we wanted to buy. So what I did was, over the next 30 months, I've raised $18 million, bought $60 million worth of real estate, was about 4,000 apartments in 5 different states. I grew really fast, way too fast. I built a property management company managing 7,500 units, and was very unstable because of the quickness of the growth. We were in a market where the banks were throwing money at you, and it was very easy to get funding. So I was over leveraged and undercapitalized on all of those assets. I was 85% loan to value on $60 million worth of real estate. And then it caused a bunch of issues because of the instability of that as I was growing. So I always tell people, don't grow so fast. Take your time, be patient. I was on the phone with somebody today who said that he felt very fortunate because his bank was giving him 85% loan to value on a $5 million purchase. And I couldn't help but tell him that I thought that was like not a smart thing to do. So I always tell people, make sure that you grow methodically, grow slowly, be patient in your growth, and make sure that you are 65 to 70% leverage, because it causes protection. Before the call, we were kind of talking about capital calls, and I said that another thing I did was, in my PPMs, I pulled a provision out that would have allowed me to go back to my investors and say that we were struggling as a company, and that we needed more cash to put in deals. So that kind of, there were a bunch of challenges that happened along the way. So 2005, I buy all these assets, I scale these companies. I've got over 100 people working for me. And I think this is great. We're going to really be able to scale this business. My goal was 10,000 units, and we'd sell to a hedge fund. And 2008 rolled around. And I can remember in 2008 having lunch with my CFO, and the news was on where we were at. And I was watching people carrying boxes out of Lehman Brothers by the dozens. And I looked across the table at him and I said, man, we're screwed, aren't we? He goes, yeah, we're in big trouble. And not really knowing the impact of what was going to happen as a result of that. But we came off the rails. So Lehman Brothers went down, AIG turned upside down. It was a mess. The capital markets went nuts, sideways, and the residential market was upside down. I thought, this is going to be great because all these foreclosures will happen in the residential market. They won't happen in the commercial market. We'll be able to keep our occupancy up, our units full, people will need a place to live. That wasn't necessarily what happened. 2008, the market started to turn on us. We started to come off the rails. I had 38 companies at the time. A number of my companies started to falter and were heading towards foreclosure. And I hated the fact that those investors would have gotten hurt. So I started to move money back and forth between companies. And I would take money from my profitable companies and put them in my non-profitable companies, shoring it up. And my thought process behind that was, hey, I've seen recessions in the past. Recessions usually last 17 or 18 months, and there's a 10 to 12% correction in the market. And when this market comes back, I'll be able to put the money back. My attorney, my accountant said that's a great idea. Just as long as you leave a paper trail, you'll be fine. Well, the market didn't come back. It was 7 or 8 years before this market recovered, and the corrections were 40%. It was tough to weather the storm. I remember it was a Monday morning, and I had a phone call from a property manager on a property in Indiana we owned. And she said, she was in tears. It's like 7 o'clock in the morning. And she goes, I don't know what's going on. I have 30 moving trucks in the parking lot this morning, and I don't have a scheduled move out for 45 days. I was like, wow, and that wasn't the only place that happened. So what happened was, I tried to shore the whole company up. I didn't want anybody to get hurt. I never want to be the bearer of bad news. Didn't want to go back to my investors and say, hey, we have a problem. The market's bad. It's killing us. I decided to move this money back and forth between companies, and ultimately didn't disclose it to my investors. And because I didn't disclose it to the investors, I wound up being charged with wire fraud and mail fraud charges. Got sentenced to 10 years in federal prison as a result of that. So I went to prison thinking that my life was over, lost everything. So I always tell people, I say, I had this success and loss, just got wiped out, and went to federal prison. When I was in prison, I thought, man, my life is over. I didn't know how I was going to get through each day, much less 10 years. And I was probably in prison about 17 days, and my wife came and told me she was going to divorce me. And then at that point, I really felt like, the wind was out of my sail and my life was just over. So I really didn't know how I was going to get through. I didn't know what I would do. I was probably gone for about 6 weeks, and I walk in the gym one day, and I just want to tell you, and I want to clarify, I was only window shopping. I wasn't ready to work out. I was 35 pounds overweight. I went from running marathons to living this new lifestyle. And this guy walks up to me in the gym, and he says, hey, don't let these people beat you. He said, all they want to do is take everything from you you've ever known. He said, they can take your money, they can take your businesses, they can take your real estate, they can destroy your family, but what they can't take is what you're made of. They can't take who you are at the core and what you've done to build those successful companies. I went from this lifestyle of middle-class lifestyle, had a great marriage. My wife and I were best friends. I was the neighborhood baseball coach, soccer coach. I was home every night for dinner, to all of a sudden living in a 12 by 12 room with 3 men that I didn't know, had 3 green outfits and 5 pairs of underpants, wondering what I was going to do. And this guy's trying to tell me that my life can be different. And he I don't know what clicked. Something clicked for me though at that moment. And it's, you always I always ask people on my podcast, hey, what was a defining moment for you? That was a defining moment for me. I said, okay, I'll take your challenge. He challenged me to come to the gym every day and take his class and start losing weight and start feeling better. And that I could get that 10 years back. And he was right. It was probably the best advice I had ever gotten. So I started going to the gym. I started working out, started losing weight, feeling better. I decided to go to college. I went to college. I got a bachelor's degree in theology. I went on to write 2 books. One's called Exit Plan, Your Complete Guide to Multifamily Investing, and Why You Need an Exit Plan Before You Buy. And the other one was on property management. I wrote an ethics course. I taught real estate investing. I taught property management. I taught ethics in prison for 6 years. I was on an outreach program because I was a model prisoner. And I went into the community. I told my story 40 times to local businesses and to college students, during which time I met a professor from the University of Minnesota, and we co-authored a paper together. And that paper got published this year in the Business Journal of Ethics, but it was just a case study. It gets taught at the collegiate level for forensic accounting classes and sales and marketing classes. I turned my life around. I really made a decision that I wasn't going to get beat by the system. I wasn't going to get beat by my loss. That I was, I've always been a resilient person. People say, hey, what is the biggest thing in your life? And I say, well, it was the work ethic I got from my father, but it was also my tenacity, my resilience, my ability to bounce back. And you know what? It's about helping people today. So I'm in the coaching training business. I teach people how to invest in multifamily and scale their business, but do it from a place of balance, and do it from a place that you have to grow personally in order to grow professionally. And I think that that's a big difference for me and what I teach people. People always say, what do you coach about? I say, well, I don't coach about anything different than anybody else does. There's only so many systems and processes you can do for this, but we all have to grow personally in order to grow professionally. So I always say, hey, you want to buy 1,000 units, who do you have to become along the way in order to get there? Because it's great to have that goal, but who do you have to become? So, I've been back now for about a year and a half, and been building this business. I got my first book published. I've done a number of live events. I work with a number of people. Just recently was approved by the SEC to go back and issue deals and to be a sponsor again. So in the process, we just put together a couple coaching clients and myself. We put together a 40-unit apartment complex that we're doing in Tampa. And I am having a lot of fun just kind of regaining some perspective on life and where I'm at. So um, glad to be here. If anybody has questions, I'm open to questions. And so.
Yeah, awesome story, Mike. I mean, I'm as blown away now as when I first heard it. So, really, really inspiring and touching. I think a lot of us go through our own personal ups and downs, and it's really interesting to hear your story. Where I think for a lot of us, the worst what if scenario of being, entrusted with people's money and then ultimately ending up in, behind bars, that played out for you. And to see that you were resilient enough to kind of bounce back, that's super inspiring for us, and also puts in perspective any of the day-to-day stuff that we all go through as investors. I'm just wondering, during that time when you were in prison, and you heard your other guy talk to you about getting into the gym and things like that, was that kind of the turning point, or what changes in habits or perhaps mindset did it take for you to say, okay, I'm not going to give up now. Failure is not final. I'm going to bounce back here.
Yeah, it probably took me about 18 months. There were a couple of guys that, prison's kind of a funny place, as dark and evil as it is, and as tough as it can be on a day-to-day basis. There were a couple of guys that circled around me that said, hey, the joke was, and the big joke was, we need to take his shoelaces because he's probably going to hang himself. I mean, I had no idea how I was going to get through. I walked every day. You ever go somewhere and you really want to leave really bad, but you know that you can't leave right now? That's exactly how it felt. So the turning point was what Kirk said to me, which was, don't let these people beat you. And the ability to start working out again and feeling better physically. Energy, motion causes us to have energy. And I don't know if anybody follows Tony Robbins, but all of that stuff that he talks about and gets people jumping and hopping at his events, that works. I mean, that energy, and I learned that from being in prison, because, I could have laid in bed, I could have watched TV, I could have just ate for, 8 years, but I chose to stay healthy, stay fit. And they were good choices. So I think it was that was one of the big turning points And then about 18 months into my stay, um, a guy that I had gotten really close with went home. And when he went home, I was like, all right, I have to really grab myself by the bootstraps and do this. Um, and so I just made a decision, and I think the decision was made before that, but that just reinforced it. And I'd been going to school. That whole thing to go to school was an issue, right? I mean, real short story. I wrote to 5 colleges while I was in prison, and they were all colleges that had scholarships or correspondence courses, because in prison you're not allowed to use a computer, you can't get on the internet, you can't do any of that. So I needed to have a scholarship and I needed to have a correspondence course. Well, I wrote to 4 colleges, and all 4 of them within 30 days sent me a letter back and said, we don't either have a scholarship right now, or we've discontinued our correspondence courses. Well, somebody said to me, they go, "Hey, did you try the Shalom Bible College from Iowa?" I said no, and so I wrote to them, and I never heard back. And it was a year to the day. So I wrote them in 2014, 2015. I got a letter back from them that said that I got accepted in this scholarship program. And so that's when I went back to school. Prior to that, I had been working on some study courses and some other things like that. I took a course from the business school at the University of Texas at Austin on ethics, which was an unbelievable course that these guys offered. And um, so it was an interesting journey. I think I had a couple turning points, Mark. That's kind of a long answer to your question, but
That's great. That's great. And kind of going back earlier in your story, you had mentioned that some of the decisions that led to this were due to the fact that it was, 07, 08, and things on some of your properties went awry. I'm just curious, what would you have changed if you were to kind of redo some of those deals, or maybe even not do those deals? I'm just curious what decisions led to that, to you being in that position.
yeah, so that's a really great question, right? 2007, I closed 17 deals for 2,700 units. Hardly had time to breathe during that time. It was fast paced, tie them up, and close them. I mean, people were throwing money at us from banks to lenders to mezzanine lenders, and it was easy to get a deal done. Um, I always tell people, don't grow too fast. Make sure when you take an asset over that you stabilize it. Run that asset for a while, understand it, start your construction, start your rehab, start your retenanting, then go to the next deal. You know, if you feel you're going to get bored, then go buy 200 units and do it. Get that stabilized before you go to the next asset. Um, the other thing is, don't get over leveraged. I was over leveraged. I under raised money because I was over leveraged. So because I could get 85% from the bank, I never felt that it was necessary to get more cash from my investors, because the market in multifamily was growing so fast. I didn't think that those markets would stop, but here's what happened. So I was heavily invested in the car markets and the transportation markets. So take the Ohio Valley, for instance. Between Indianapolis, Dayton, Ohio, and Cincinnati, I owned about 1,800 units in that market. And everybody who has a job in those markets pretty much work for the little manufacturer for the car industry. So the people who make knobs for radios, dashboards, seat liners, beading for seats, all these little businesses are in the Ohio Valley, and they all supply the car industry. Well, 2008, within several months, they rolled up all those businesses. All those businesses were out of business. So there's no income coming in. All these people needed to move somewhere else, so they either doubled up or went back home. How many people do you remember went home with mom and dad during that time, right? Because they couldn't afford to live where they were living. And we thought, well, you know, we're in the B class market, C plus, B class market, that we'll have people coming down from the A class markets to move in, because middle management will start losing their jobs and move down into the workforce housing. Well, it didn't work that way. The markets just went totally in directions that you wouldn't even been able to predict. So, and again, I took the provision out of my PPMs that said I couldn't go back to my investors for a capital call to help shore up the deals. And you know what? Pride, don't let pride get in the way. I was prideful. I didn't want to come back to you, Mark, and say, hey, Mark, we have a problem. You know, the markets are kicking our butt. I don't know what to do about this, you know. Um, so um, I didn't do that. There's four things right there. The other thing is I didn't pay attention to details along the way. So when I talk about not paying attention to details, listen to the people around you. You have people that are watching you, that are partners with you, that are assets that you are around you. Listen to them. Listen to what they say. I was in Ohio trying to close a deal in 2008, and the deal's not closing. It's not closing. I'm waiting for funding from my office. Where's my partner? How come he hasn't wired the money yet? 10 to 5 on a Wednesday night. And I finally get him on the phone. And I say, you know, he says, I don't know how to tell you this. Now, I don't know if you've ever been in a position where you're trying to get something done. You're waiting on your partner. You're 1,000 miles from the office. And he's going to tell you, I don't know how to tell you this. What's the first thing that's going to run through your mind? Well, he proceeds to tell me that he took $500,000 from an escrow account and moved it to the business account because he needed money for some operations and some things. He thought he'd have the money put back by Friday or by Wednesday, by closing. And I kind of went crazy at that point. I said, you know, we had this conversation before we ever went into business. He goes, I know. It goes, I never should have done. I said, okay. So what I wound up doing was dry closing on that deal, which means all we did was sign all the paperwork. I said, I'll have it funded by Tuesday. I went back to the office. That night, I was able to catch a flight, get back to the office in the morning. I got on the phone, started calling investors. I raised money for the deal to get the deal funded. So I had it done by Monday or Tuesday the following week. But on Friday night, so between Wednesday and Friday, we go to dinner with my partner, his wife, my wife. The four of us go out. Now, I want to say that I never talked to my wife about business. And I always kept her like in the shadows because I didn't want her to worry. She worried and worried and worried all the time. And I didn't want her to worry about anything. So I would tell her from time to time, hey, things are great, or, you know, I met a new investor, or we closed this deal. Never talked about anything bad, which in hindsight was good when I got indicted. But what happened was we go to dinner on Friday night. We're on the way home from dinner, and out of clear blue nowhere. Now, she doesn't know what happened on Wednesday. Out of the clear blue nowhere, she goes, I don't trust him. There's something going on. And what do? I think I'm a good husband. And I'm going to say, hey, honey, don't worry about this. I have it under control. Thinking that, you know, I'm just going to make her feel safe and that's fine. When in reality, what I should have said was, tell me more about that. Okay. When somebody comes to you and they tell you, hey, I don't like what I see or this is going on, let them tell you why. Ask them why. Well, I didn't do that. So we kind of got blown off, pushed under the covers. I'm stressing, right? Because I have this situation going on. The following Wednesday, I'm at lunch with my attorney, and we're walking to the car after lunch, and he goes, listen, I just want to tell you something. I go, what? He goes, I don't know what's up with your partner lately, but there's some things going on that I don't like what I'm seeing, and I don't trust him anymore. And so what do I think about? I think about Friday, what my wife said to me, and now he's telling me this, and I go, Bob, don't worry, I've got this, I got it handled, we're going to be fine. And we weren't fine, and I didn't have anything handled. From there, it just spiraled out of control. It was shortly after that Lehman Brothers went out, and then AIG and Bears and Stern, and, you know, the capital markets went sideways, and, you know, I stood there like this. What do you do? You know, and we were able to raise money for a little while longer. We got a couple more deals closed. And my whole philosophy was, hey, you know, if you need money, go close a deal because it brings capital in and it brings cash in, and but it all stopped. You know, we couldn't close deals anymore. We couldn't get deals done. People quit selling deals, and so I don't know if that answers your question, but
Absolutely.
listen to
Yeah,
the people around. So if I had to say, listen to the people around you, pay attention to the red flags and details, listen to your gut, don't over leverage, don't grow too fast, make sure you raise enough capital. You know, those 6, 7 things are really important to pay attention to as a syndicator today.
that's awesome. Thanks, Mike. Are there any other questions from the group here?
Mike, I had a question. You know, for being, you know, heavily involved in the industry in the early 2000s or even prior to that, and then kind of being out of it for a chunk of time and getting back into it, did you notice any changes in the industry? You know, maybe from approaching deals or working with different people or brokers that has changed over time, that's maybe harder now or easier now than was in the past?
Yeah, that's a great question, Garrett. So a couple things, right? When I was gone before, or when I was doing deals a decade ago, we were putting everything together ourselves. There were no partnerships, right? I had a partner, and we went to the bank. We brought private equity in, and you know, we did everything ourselves. Now you put these strategic partnerships together. You know, they're groups that people come together to do these 20 and $30 million deals. I find it very interesting today and almost exciting because you're putting strategic alliances together. And what's cool is I have 2 partners right now that, you know, are awesome. I mean, and, you know, Rochelle handles all the, you know, she really handles our compliance and our marketing, right? She makes sure our I's are dotted, our T's are crossed, you know, and she, this morning she said, hey, you know, we're going to miss a deadline here if we don't do something on an inspection. I said, okay. So I was able to go because of my relationships and work out an extension that didn't cost us any capital or didn't cost us any money with the broker and the seller. And so my other partner handles some construction and management oversight, and we kind of combine on that. And I handle the a lot of relationship stuff and forward motion of the company. And then we brought a family office to the table as a key principal to handle the funding and get the loans. So it's interesting today how, you know, you don't try to do it yourself. I mean, there's too many people out there, too many assets, too many resources for you to go do deals with other people. Listen, I'm only as smart as I am, but I know if I partner with Mark and you, Garrett, and anybody else, that makes us even more smarter, right? And that makes us more cautious. And listen, one of my partners, he and I go like this a lot because he's so conservative and so critical on what he looks at that sometimes it just drives me crazy because I'm not that critical. But it's a good thing. That's a good match. We've learned that there's a place in the middle for us that we can spend our time and put together a solid deal. So, you know, we're doing a deal right now in Florida, a 40-unit deal. I think the strength of our partnership is just what really sets us apart as a group. The strength of the deal, because the way we bought it, the way we structured it, the loan we have on it, just makes it's going to be a home run. So I hope that answers your question, Garrett. Yeah. And the other thing is deals are harder to get today. Okay. Because I underwrote 100 deals to write 7 LOIs to get one awarded. But deals are harder to get today. You used to be able to buy things all the time, just like that. Right. And you can't do that today as easily.
Like some
Right,
awesome
thanks.
lessons there. Yeah, some awesome stuff there, especially about scaling sustainably and taking your time. It's very refreshing to hear that, in this kind of environment where we hear about people growing just so quickly and achieving hundreds and even thousands of doors, within their first couple of years of investing. So it's super refreshing, especially now. One of the things I took away from what you've spoken about is just growing prudently and kind of intelligently. And as you do that, you're able to learn those lessons and your seminars or your mistakes, if you will. They help you learn and help you build, and they don't necessarily put your portfolio at risk. To the point where you're just going too fast. Some of the other things I took away from what you just mentioned, or potential pitfalls that we should avoid as investors. We're investing in areas with maybe one or two employers or one or two industries, maybe diverse areas like that. Not letting pride get in the way, paying attention to details, often listening to team members, or in your case, your spouse, and also finally starting with an exit in mind. And I guess I'll use that as my kind of tacky way to transition into talking about your book, The Exit Plan. Just curious about what that book is and how people in our audience can get it if they'd like to.
Sure. This will be kind of another answer for Garrett on his question too. So I wrote this book called Exit Plan, and the reason I wrote it was because I felt that I spent hundreds of thousands of dollars over the years on coaching and training and books and tapes, going to seminars, and some really great trainers. And everybody teaches you how to find a deal, get in a deal, buy a deal, operate a deal. Nobody teaches you how to get out. Nobody teaches you when to get out. And I wanted to come from a place where I taught people how to maximize your profit potential in a deal. Exiting doesn't always mean I'm selling it and giving up control. You might be recapitalizing. You might recapitalize a couple times. You might bring a partner in. You might exchange the deal. There's different ways that you can exit. So I wanted to be able to show people different options. When you underwrite a deal, you typically underwrite it for 7 or 10 years, right? Well, somewhere in that 10-year spread is your highest profitability point. Usually going to be somewhere between 5.5 and 8 years. And why not do something at that point? Plan your exit strategically around that. So what if you refinanced at year 7, pulled your capital out tax-free, reran the numbers again for another 5 years? What does the deal look like for you? And how will that grow for you, help you grow? So there's different ways to look at things. And I want people to have an exit in place before they get to closing. Before you ever buy it, have that exit in place. So you can get a copy of that. Oh, I'll finish this. You can get a copy of that book if you want. You could go download it. I put the link in the website or in the chat, but it's if you go to my website, which is mycoreintentions.com/exit plan, you can download a free copy. And here's what I'll tell you, and I always warn people, because I had somebody on a podcast one day that goes, I'm late because I was printing this book. There's 264 pages here. I said, I told you it was a book. It's not just she goes, yeah, but most ebooks. I said, no, it's a book. So.
That's awesome. I'm sure there are tons of gems in there as well.
I just want to jump in real quick just to reset the room, because we have a few people that join on afterwards. So definitely use the chat to put your information and jump in with any questions for those who joined in later. I'll just have my question real quick. I know you talked about looking at 100 deals just to make 7 LOIs, and how competitive this market has become. What are you finding the best way to source deals right now? Are you working with brokers? Are you going direct?
Yeah. I think relationships are the best ways to source deals. This business we're in, it's a relationship business. I don't believe that, I've only been home for 18 months, and I don't believe that I would have gotten done what I have gotten done unless it wasn't for a few strategic relationships. People who said to me, hey, we believe in you and we know that you're going to do well. And so have kind of like helped me get to where I'm at today. Right. And that's what I do for other people. That's what we should all do for other people, is how do we give back? How do we help somebody else? So I'm a big connector. I've always been a connector. And Mark, if I see somebody will help your business, I'm going to connect you with them. Jerry, same thing. You know, if I see somewhere that something will happen in your business, I have a coaching client. I just connected him with a couple of people, and all of a sudden, some doors opened up for him that would have never opened up before. So I believe that it's a relationship business, and it happens for all of us. So who do you know that can benefit somebody else, right? So it's that giving back mentality.
That's awesome, Mike. I think the punchline for me with your whole story is just you went through this, probably the toughest imaginable situation for an investor, and you came through the other side as a better investor, or a better version of yourself, really making positive change in the industry. So again, just super inspiring to hear your story for a lot of us who may go through our own daily kind of ups and downs in this real estate journey. So it brings a quote to mind: grow through those experiences, don't go through them.
Yeah, for sure.
So, Mike, you're also hosting a conference shortly as well on how to do multifamily syndications. Is that correct?
I am. I have a 3-day live event coming up in Chicago, October 14th through the 16th. It's going to be a deep dive into multifamily. And of course, I'm going to teach all those things that everybody teaches, right? How to find a deal. I'm going to talk a little bit more in depth about the things I learned from the mistakes I made and how we avoid those and what we should look for in those pitfalls a little bit differently. I'm going to talk about how to source and locate, good off-market, on-market deals. How, I come from a fishing mentality. I don't like to fish, but I believe in the process. The more lines you have in the water, the more fish you catch. So why should we not have 3, 4, 5 lines in the water trying to source deals? I sold 78 houses and hundreds of houses a year when I was selling real estate because of the systems and processes I had in place. So we can put those same types of processes in place. I'm going to talk a lot about underwriting. I believe today, the underwriting space, you need to be really conservative. I underwrote that first, or I didn't underwrite the first deal. The next deal I underwrote by hand because I wanted to learn everything. I didn't have the luxury of a tool. Everybody has the luxury of a tool today. I believe you should underwrite a couple of deals longhand and see what you have to think through in order to really look at what you're looking at. So we're going to underwrite, we're going to talk about due diligence, operations, and I'm going to talk about building an exit plan. So we're going to really do a deep dive for 3 days into multifamily. I'll have a panel. I'll have somebody there talking about IRAs, but it's going to be, it'll be a good event. If you cannot make it to Chicago for a live event, it will be streamed live. So you'll get the same effect as if you were there. And so I'd, love to have you guys join me for that. So.
Yeah, for anybody interested, we just posted the link there in the chat, so feel free to check that out. We also posted Mike's contact information as well as the link to the exit plan book. So I guess we can, if no, are there any other questions for anybody in the group here? I guess if that's the case, we'll leave off with one, maybe a high level question. If you could put together, you've dropped so many different gems on us tonight, and thank you so much for your time, but if you could put, I guess, one sentence down on an index card to hand to a new investor looking to get into multifamily, what would that one sentence on an index card be? I'm going to put you on the spot there.
Yeah, don't be defeated. Stay consistent. Jerry, I said I underwrote 100 deals to find one that we finally went to contract on. You know what? You have to be willing to do things that most people aren't willing to do. And what does that take for what you're trying to accomplish? How many people can you talk to? How many relationships can you build? What do you have to do to get out of your comfort zone? I'm a huge subscriber to Gary Vee. And he talks about, spending 7 or 8 years in his 20s in the liquor store, doing nothing but doing that and then going home and being on social media. So what are you willing to do that other people aren't willing to do. That's one thing. Don't give up. Don't quit too early. Stay after it. And the other thing is be conservative. So I think that there's two real topics of conversation. Don't give up and be conservative, because you need to look at deals from a different lens, from a different perspective. Make sure you're stressing them, putting a good stress test on them. What if? People said to me, what's the worst thing that could happen? So when people were investing with me and throwing money at us, what's the worst thing that can happen? And I always said, oh, everybody could move out, laughing about it because I never thought it would happen. But let me ask you, are you prepared if it does? Okay. So we always underwrite. We look at that metrics that says, hey, if I have a 10% vacancy, and we like to cheat it, right? As a sponsor, man, I really like the deal. I fell in love with the deal. I like it. I want to own these 100 units. You know what? It's running at 8%. Let me just underwrite it at 8%. I think I can run it a little better. Let me underwrite it at 6% vacant. Don't do stuff like that. Make sure that you're looking at physical occupancy. Make sure you're looking at economic occupancy. What if the market shifted? Okay. We're in an unprecedented time right now. Prices are really high. Are they going to stay that way? How long is it going to run like this? How long are you going to operate that deal? Make sure you have more money in reserves than you need to have. Even if you have to pay your investors a little bit of interest on that money in reserves, over raise, put some money on the side. It's a long answer for a 3x5 card.
You can fit it on there. That's fine.
Yeah.
That's great. That's great. So don't be defeated. Stay consistent. Don't quit too early. Kind of stay after it. And then as well, you kind of hammered home the be conservative. Over raise if you have to. It's better to have more reserves than less. And don't get over levered. From your story, we definitely took that away as well.
Yeah.
Hey, Mike, it's Gonzalo. How are you?
I'm good. How are you?
Good, thank you. I just wanted to just say, man, the story that you told really resonated with me. It kind of puts a lot of things in perspective, and truly appreciate you going out there and telling it. And even more importantly, is how you managed to really succeed and make something really good come out of it. So I commend you for that, and definitely the greatest success stories, comeback stories of real estate that I've heard.
Yeah. Oh, thank you. I appreciate it. And you know what? Everybody always talks about their success, and people rarely talk about the failure, and I think, I think there's a message in that. So I appreciate that.
Awesome. Well, with that, I think we've run our course here. Mike, thanks again so much for your time. Really, really appreciate it. And like Gonzalo said, I mean, it's a story we don't hear enough about, is people's what do you want to call them? Seminars, we'll call them. I guess words are very important, so we'll call them seminars, not failures. But thank you again for sharing it. I'm sure you're going to go on to do awesome things, as you already have done in this industry.
Yeah, I appreciate it, Mark. I appreciate you guys having me on, and I'm totally open to networking. If anybody has questions or looking for guidance or anything I can do for anybody, don't hesitate to reach out and send me a message. You can reach me at mike@mycoreintentions.com. That's my direct email, and I'd be more than happy to spend some time with you. So, and love to see everybody at the event. So go register today. So
We'll buy my ticket tonight. Awesome.
nice.
Thanks again, Mike.
Hey, thanks for having me, guys, and let's connect.
Sounds good.
All right.
Everybody, you have his contact information.